Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Angel Oak Mortgage REIT, and let me tell you, things might not be as heavenly as the name suggests. We will see a loan company taking out a loan to in turn buy even more loans. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss all things finance. Angel Oak Mortgage REIT just released a report about a deal to offer more notes which are like IOUs to the public. They're planning to sell $40 million worth of these notes, but what's interesting is what they plan to do with the money they raise. It seems they want to buy more mortgages. Let's take a closer look to see why they need the cash and what it all means. This report is called a Form 8K. Companies use it to tell investors about big news that could affect their stock. In this case, it's about a new financial agreement Angel Oak Mortgage REIT made. The important date here is May 14, 2025. That's when the company agreed to this deal. So it's the day the events that led to this report happened. Angel Oak Mortgage REIT is the company we're talking about. It's a real estate investment trust, or REIT, which means they invest in mortgages and other real estate stuff. Okay, so Angel Oak Mortgage REIT made an underwriting agreement. Think of this like a promise to sell a bunch of IOUs, also called notes, to investors. They've teamed up with a group of companies called underwriters, such as RBC Capital Markets, UBS Securities LLC, Wells Fargo Securities LLC, and Piper Sandler & Co., to help them sell these notes to the public. These notes are called 9.75% senior notes due 2030. That 9.75% is the interest rate, meaning that's how much they'll pay back on top of the original amount. The due 2030 part means they have to pay it all back by 2030. The total amount of notes they're selling is $40 million. There's also an option for the underwriters to buy an extra $6 million worth of notes. This is in case there's a lot of demand and they want to sell even more. It's like having a backup plan. The notes are being issued under something called an indenture. Think of it as the official rule book for these notes. It lays out all the terms and conditions. These registration numbers are just paperwork filed with the Securities and Exchange Commission, or SEC. It's like getting a permit to sell these notes to the public. After they pay all the fees and costs to sell these notes, Angel Oak expects to get around $38.2 million. If the underwriters buy those extra notes, they could get up to $44 million. Here's the important part. Angel Oak plans to use this money to buy more mortgages. They're looking at non-qualified residential mortgage loans. These are mortgages that don't quite meet the standards for super safe loans. It also says they can buy other assets in a manner consistent with the company's strategy and investment guidelines. This is just the end of the report where someone from the company signs to say it's all true and correct. Now let's put this all together. Angel Oak is borrowing $40 million and maybe up to $46 million by selling these notes. They're going to use that money to buy more mortgages, specifically the kind that are a bit riskier. What does all this mean? Angel Oak is betting that they can make more money from these mortgages than they're paying in interest on the notes. If they can pull it off, they make a profit. But if those mortgages don't pay off, they could be in trouble. This strategy has some risks. If the housing market slows down or interest rates go up, people might have trouble paying their mortgages. If that happens, Angel Oak could lose money. On the other hand, if Angel Oak is good at picking mortgages that will pay off, they could make a lot of money. They're betting on their ability to find good deals in the mortgage market. What's interesting here is that this company is issuing debt in the form of notes, so they can in turn acquire debt in the form of mortgages. Now, looking at these results more broadly, Angel Oak appears is trying to grow, and they're using debt to do it. However, the move does increase the company's risk. For the company to be successful, they need to be able to get mortgages that return more than 9.75 FOL. They need to be able to get mortgages that return more than 9.750%. And they need those mortgagees to actually pay back their debt. Alright, that's our breakdown of Angel Oak Mortgage REIT's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.